Hey, what's up guys? Pete Metz here with Vaughn Mortgage. I wanted to share some information about, you may have heard of it, it's the tax credit that Congress is going to be potentially introducing and getting this bill passed for tax credit. And I wanted to go over the details of this tax credit because it could definitely affect our home prices again, still creating more demand in this ever evolving real estate market. So this tax credit that they're wanting to introduce has not been passed yet, but there's a lot of talk about it, and I kind of got some of the details of what's in this bill. So the first thing is this tax credit is up to $15,000. You may have remembered back in 2010, 2009 when they introduced the tax credit before. It was the first time they had done something like this. You got up to $8,000 on a tax credit. Well, this one is up to 10% of the purchase price, or up to $15,000, maximum of $15,000. And so that's the first thing to know. The second thing is it will probably have income limits, and they're saying it's going to be about 160% of the median income for the area. So our median income here in Shasta County is about $69,000 per year. So if your family makes about what they're saying is the average family makes about $69,000 here in Shasta County, and they'll go up to 160% of that, which means that you could qualify for this if you make under about $111,000 once this tax credit is potentially proposed and approved. The third thing is you have to stay within the median home price range of what the average sales price is here in Shasta County. The average sales price is about $330,000, $325,000 here in Shasta County at the moment, and they will go up to 110% of the median home price, which means that you would more than likely be able to get this tax credit up to, if you purchased a home, up to about $358,000 on the purchase price. And that's very interesting to know. You must be 18. You must be a first-time home buyer. Now, a first-time home buyer is technically, if you have not owned a home within the last 3 years, you would technically be classified as a first-time home buyer. Also, it has to be your primary residence. Also, you want to, if you did get this tax credit and it was approved, you'd want to keep the paperwork, the settlement statement, and you would just give that to your tax professional, and they would be able to make sure you get that tax credit when you go and file your taxes. There's a recapture period. This is super important to understand too. There's a recapture period. What this means is if this bill was passed and if you purchased a home and you got this $15,000 tax credit, then if you sold your home within 4 years, you'd have to pay some of that back. And think about it like this: every year, if you sold your home within 1 year, you'd have to pay back 75% of the tax credit. If you sold it in 2 years, you'd have to pay 50%, and so on. So 25% a year. So after 4 years, it becomes completely forgivable. And then another really interesting point is if they do pass this bill, currently written in this bill, it's actually retroactive. So it's retroactive back to January of 2020. So if you purchased a home in the last year and a half after January of 2020, then you would potentially qualify for this tax credit. Also, one very important key to remember is this bill has not yet passed, and it's simply talk right now. It is looking like Congress and they really want to push this. My professional opinion on this tax credit is it's going to create even more demand on the housing market, and we already have a housing shortage, so this will continue to drive prices higher. So if you're thinking about buying, it is still a great time, and interest rates are still extremely low, all-time lows. And if you did buy, because it's retroactive, it's going to create more equity and more appreciation, more demand for the housing. So there's another tax credit that in addition to this one that they're also talking about, which is a $25,000 grant that they want to give to, they call them first generation home buyers. First generation home buyers maybe your parents have not ever purchased a home, or maybe they lost a home. And so if you're a first generation home buyer, they want to give you up to $25,000 for down payment and closing costs. That's completely forgivable. That's also something that they're trying to write in and trying to put into this bill. And so that one is called Down Payment Towards Equity Act, is that tax credit. And the first one I was talking about is actually the $15,000 first time home buyer tax credit. So if you guys have any questions on this, I'm going to put all the information below, and you'll be able to read up on this. Hit me up if you have questions. It's a great time to purchase, and I hope you guys are doing great. We'll talk to you guys very soon. See ya.